Next week, Monday morning itself, we're going to be coming back to you at 11 a.m. to get all your stock-related queries answered. But before that, viewers, since it's Friday and we are getting you the Buy Now, Sell Now Pathshala, and like always, Kunal Bothra is here to help us with the learnings for today. Over to you, Kunal.
Well, yeah, so today's topic is on head and shoulders pattern. It's a very interesting price pattern, something which we've not been discussing in the previous sessions of Pathshala. And today's session indicates that the head and shoulder patterns generally acts as more of reversal patterns to an existing trend. So I've taken two examples over here, and one of them is a very recent example of what we spotted on the charts and why the charts for a particular stock had gone to certain signs of weakness. So head and shoulder pattern generally indicates that whenever a trend is in motion for the stock price, there is a sudden reversal which happens. So this is more like a distribution pattern where as you can see that the stock tried to, from a corrective phase, the stock starts to get into an uptrend. There is a minor rally for the stock price, a minor correction which happens, then a second retest towards the previous highs, and the stock breaks past above the previous highs, makes a new high for itself, again comes back and retests almost the exact previous low for the stock price, a bounce back again into the stock, and this bounce back is almost equal to or slightly lower than the previous highs for the stock. And then it completes the corrective phase for itself. So this is a classical sign shown in L&T's chart very recently, where the stock had seen a correction and the formation of a classic head and shoulder pattern. So we call this zone as a shoulder, this zone as a head, and this zone as the right shoulder for the stock price. And a break below this trend line confirms that a head and shoulder breakdown has already happened for the stock price. Typically post this, we expect the stock to get to a sell-off, but it also depends on the beta nature of the stock price and how the previous trends for the stock has been. So if the previous trend is very sharp, then we expect that the correction could be a much more sharper. But if the previous trends is a bit more shallow on the upside, then we expect the correction also to be a lot more shallow this time around for the stock. So I've taken one more example, and this is on the benchmark indices Nifty 50 itself. But this is on the historical front when we spotted the index forming a head and shoulder pattern. So as you can see, this is more of an inclined head and shoulder pattern. The stock forming a shoulder, the index forming a shoulder, a new high, then second a formation of a head. The previous highs for the new high for the stock was almost equal to or lower than the previous highs, and then a continuation or a confirmation of the breakdown for the stock. So this in classical terms we call it as an inverted head and shoulder pattern, or a head and shoulder pattern rather. And this becomes the breakdown point. A fall below this level is where we expect the index to get into a downtrend. So this is a classical sign of a head and shoulder reversal pattern for stocks as well as for indices.
If you like this video, then like, share and subscribe to ET Now.